So US jobless claims data is about to be released, and I'm going to be looking to trade gold and NAS. I already know what to expect if the data comes out higher than expected, or if the data comes out lower than expected. I have a plan in what trades I'm going to be taking. When the data comes out, I want to make sure that it's not mixed, meaning some of it comes out like bullish for gold and bearish for gold at the same time. I want to have a clear reason to take a trade if I'm going to take it when the data comes out. So number one, the data needs to be clear. It needs to be in my favor. Number two, I want to see price action on either gold or NAS following whatever bias it is that I have based on the data. So for example, if the data comes out lower, I'm not going to just take gold sells. I want to see gold actually break a support and start pushing lower, then I'm going to enter gold sells. If gold pushes higher, but the data is telling me it should go lower, I'm not going to take it. This is how you avoid fake outs, which basically just means the market looks like it's going to go one direction, but it ends up going in the other direction and you take an unnecessary loss. The first thing I want to understand is market expectations, because this is how I can understand if I find an opportunity in the markets. Now, if the data comes out higher than expected, you can see here expectation is 230K. If it comes out above 235, I'm going to be looking here where I put above expectations. And once again, I'm trading equities, which is NASDAQ, and gold. So if this data comes out higher, I'm looking for gold buys. I'm looking for NASDAQ buys. Now on the inverse side, if the data comes out lower than expected, below 220,000, I'm going to be looking for the opposite. I'll be looking for NASDAQ to sell off. I'm going to be looking for gold to drop. So I'll be looking for gold sells. I'll be looking for NASDAQ sells. What that means is this should follow the data. If the data comes out higher, NASDAQ and gold buys. If the data comes out lower, NASDAQ and gold sells. So we'll see, we got 2 seconds, 1 second. Jobless claims so far, the surprise to the downside. NAS pushed up a little bit. Like I said before, gold is pushing to the downside. Be careful selling this. Gold's sitting at all-time highs. NAS hasn't really moved yet, and I'm still bullish on this. NAS, like I said, if NAS breaks this, I think it's risky to take sells. This is a surprise to the downside. And Philly Fed came out higher too. If anyone took gold impulsively, it is pushing to the downside. Just make sure it actually breaks this. Like I said before, a lower print, I'd look for both of these to drop. But this is a short, at least in my opinion, short term. Gold so far looks the best. We'll take a look over at dollar too. Dollar should be gaining strength. Yep. Yeah, currency pairs look really good. Right? So we get that. This is what I meant, right? Jobless claims coming out lower. Dollar's going to be inverse. NAS not really reacting. And like I said, be careful on gold. It's still bullish. We're getting kind of a decent reaction. You just want to make sure it holds. I'm going to set alerts on NAS. I don't think NAS is going to break, but if it does, I want to know. Dollar strength, you're looking for UJ buys. So if anyone entered UJ impulsively with that lower print, perfect. Just like you were asking before about trading USD JPY, you can do that on this data. But see how like NZD USD is inverse, GU is inverse, Euro USD is inverse, the dollar, because it's the second currency in the pair. I wouldn't be married to this data. I'm not in anything on this. I don't like that NAS hasn't reacted. And gold, to me, I mean, it still hasn't broken market structure. So it still looks good if anyone entered impulsively. Just be aware. Like I'll actually mark off this like lower time frame zone here. You want to make sure if it does hit this area, that would be a zone I'd at least go break even on. Number two, you want to make sure it breaks it in order to hold this trade. But just be careful if it holds this and just consolidates. You can see right here on gold how it just consolidates when we hit all-time highs. There's a chance it'll do it again here. So this, for me, this isn't a trade that I want to take. It goes against the bias. But like I said, if you're in gold sells, hopefully you entered impulsively and you didn't enter at the bottom of this candle sitting right above support. I wouldn't do that. And NAS pretty much doing what I expected. Even though technically the data should be bearish for NAS, this is why I don't want to go against the bias, unless if I see breaks below structure, right? Like it was a surprise to the upside, but price action is not telling me NAS is dropping. That's the only time I'm going to enter those sells. Even then, if it starts to break now, let's say 5 minutes goes by, if it breaks this support, I'm probably still going to leave it alone. The only time I'd want to enter NAS sells, this is just me, is if the reaction when the data is released breaks this support. That's when I'm taking that. It feels a little risky to me. This is good price action. When you take a look at the little order block you're getting here, you come to the 5 minute, this actually looks really good. If I were to circle that area, this is a nice order block. If you get a breakout to the upside, you can have tight stops here on NAS. And in my opinion, this still follows the overall bias, right? If you take a look over at tech stocks, NVIDIA pushing to the upside right now, Apple pushing up, Microsoft, all the tech stocks right now in NASDAQ are pushing up, and the volatility index is pushing down. This is what I meant when we talk about intermarket correlations. The problem is, number one, we still haven't gotten any closures above this little order block, and number two, technically the data is still bearish for NAS. I don't want to sell it because, like I said, I think it goes against the bias. So to take buys here, it feels a little risky too. I think what I'd prefer to do is just wait for NYSE open. If we do get closures above here, just know that like you can have a tight stop there, but I'd prefer to wait for NYSE, see if we get a pullback, consolidate, and then break out back up to take buys. To me, this isn't really the best opportunity to take these buys yet. But I will put alerts here. Like I said, if anyone's gold still holding, if anyone's in those sells, hopefully, honestly, you should have just taken profits somewhere at these lows here. And dollar's about to get a 5-minute closure, so I'm not going to say this is going to happen, but I won't be surprised if dollar gives us this closure and then comes right back down and recovers. But still, at the moment, the data is still good for dollar strength. But if we take a look here, if you guys remember, I showed this to you before. This is what the markets are currently expecting for the next rate decision in November. We're 67% priced in for a 25 basis point, and we're 33% priced in for a 50. This hasn't changed. I showed you guys this like 30 minutes ago. It's still the exact same. So even though you're seeing the dollar react, nothing has changed for market expectations right now, even though we just got a stronger labor market print. So it's just a matter of watching and monitoring DXY. Right now, it's still holding to the upside. And if anyone isn't any currency bears, you never know if gold or NAS is going to be the mover or if it's going to be a currency bear, right? So for those who are watching UJ, I know a couple of you guys, Thomas, I think you like Euro USD. So if you're in this, it still looks really good. Just going to monitor price action now. The data is still good for dollar strength. You just need to see how far it's going to hold. Gold, if anyone's in that too, also breaking support now. So if you are in sells on gold, good catch. The data makes sense. The dollar strength, like I said before, lower data, gold should follow, which it's doing right now. So if you're in that, cool. Just be careful and watch price action to see if we get any reversals. Just like we saw yesterday, as price action slowed down after the rate decision, I'm still going to look for that reversal to get back in on buys. So I'm happy gold's pulling back. I want it to pull back because I'm still bullish on it. You want to be careful for holding sells long term because I am still bullish on gold. Reason being that we're still bullish on gold is if you take a look at monetary policy or if you take a look at what the markets are expecting, we're still expecting rate cuts. That's still bearish for the dollar. It's still bullish for gold, which is why even though we can, this is what day trading is, right? We take the opportunity, which is what you're seeing right now. But long term, you got to be aware of this is still going against the overall bias. So gold still does look really good for sells, no reason to get out of it. But in terms of what the markets are expecting for monetary policy and rate cuts, I'd still expect gold to reverse and continue higher. Like I said, this is one of the reasons I'm making a whole video on entering trades and what to look for entries, because I see people entering buys like here on a bearish candle, and that's one of the worst things to do. We do have videos on what to look for entries, but number one, you can see that I have an alert here, and I'll send charts in the group too after we get off the live call so you guys know at least what I'm looking at. I'm going to have an alert here, so if it hits this, I'm just going to watch to see if it reverses, right? And that means like an order block, that means a double bottom. There's so many different types of reversals that I want to see if gold hits the area first, and I'm going to wait for data support. If it just I guess you could mark this area off here that it's hitting right now. If it just consolidates here, the next area I'll look for an entry is going to be right here, breaking back above this zone. So for me, the two places I'll put alerts, because I want to look for entries there, is right here at this support, or right here at this resistance, if you will. If it just breaks back above and dollar DXY right here completely starts to melt again, then I'll start looking for gold buys. Like I said before, I'm just not a fan of buying at all-time highs. So this is still a little on the riskier side. We're sitting back at these highs now. It's just a matter of being comfortable with the risk and trying to avoid bullshit like this, where we get this really aggressive profit-taking move when we hit the highs, but still keeping the overall bias. So this is what happened to the markets and gold specifically after the data came out. As we can see here, jobless claims came out with a surprise to the downside. The expectation was 230, if you can see that little blue number, and the actual was 219,000. We came out negative 11,000 than expected. Remember, I said before, I'm expecting to see gold drop if this data comes out lower. If we take a look at gold here and what happened, we saw the first reaction was a drop on gold. So if we play this out a little more, gold continued to drop right down to the next support area, which is why we were looking at gold sells. Now, the reason gold dropped is because lower unemployment is strong for the US dollar. So as the US dollar gains strength, there's an inverse correlation between the dollar and gold. So as dollar gains strength, I'm looking to take gold sells. Like I said during the live call, I want to see breaks of support. I'm not going to just randomly take gold sells because the data is telling me something. If we take a look at gold, I can see very obvious breaks of structure as it pushes lower. Now, this is against my overall bias, but still a good opportunity to take those sells, at least for the short term. I already had expectations on what the markets were going to do after the data was released, right? I'm not dependent on looking at some crazy technical indicator. I don't need a fib. I don't need a moving average break, because the markets, especially gold, NASDAQ, it doesn't matter. The markets don't give a shit about your technical indicators. And I know a lot of people don't like to hear that, but you can see proof right here. Gold is sitting at all-time highs, and the moment the data comes out at the exact same time, unemployment data comes out lower, gold immediately drops. The markets care about fundamentals. They care about the data. This is what drives the market. So if you can understand how this impacts gold, NAS, US 30, whatever it is that you're looking to trade, this is how you stay profitable in the long term. This is how you avoid crazy fake outs, consolidation, and unnecessary losses. And I'm not saying that technical analysis isn't important. I still want that for my entries in risk management. I'm just saying that fundamental analysis is what drives the markets. This is what makes the markets move. What you saw earlier with me talking to a computer screen is me managing a private group, and we trade live together every day. We trade London session, we trade New York session. I give analysis, the same analysis that I'm talking about right now, except we're doing it live. I talk about the trades that I'm taking, help them with the trades that they want to take, or even explain maybe why I'm not taking a trade and why I want to stay out of the markets today because maybe something just doesn't look right. If you want to join us, we'll put a link in the description of this video below, and I'll see you guys in the next video.